3, 2, 1. Welcome to the show, everybody.
All right. Welcome to the Thanksgiving podcast.
We made it through Thanksgiving.
Yes, we did.
We had lots of food, and
Good stuff.
if you don't know, Jerry has a super secret recipe for fish stew.
I can't believe you're throwing my fish stew under the bus. Golly, I didn't know that was coming.
Yeah,
Right.
don't ask him about it in the comments. He's not going to share the recipe, but our whole house raves over it, so we made him bring it.
It's pretty good.
Costs about $12,000 to make nowadays because of all the fish.
Good Lord.
It's got a
Inflation.
bunch
Fish
of-
inflation is pretty unbelievable, I can tell you that.
It's got a lot of good fish in it, but we had a good time. We had some family over, and Jerry joined us with little Chewy.
Yeah.
That's his dog,
she's
not his
around there
great kid.
somewhere. Yeah. Good times, good times.
What you got for us?
Got some interesting stuff this week, actually. So we're going to look at the weekly events, like what happened this week. A couple of kind of conflicting Black Friday forecasts. And then a really good question in the Facebook group this week about can you invest in gold and silver or other precious metals in TSP? And then we'll kind of compare where we are with the C fund and the F fund. So this was a pretty interesting article in barcharts.com. And the quote was, "It's been a theme in many of this year's earnings reports that the actual top and bottom line numbers are a beat or at expectations," which is good, but concerns over the economic conditions have weighed on the price after the call. So that means earnings are being beat or meeting expectations, but then that's the first half of kind of the earnings reports, and the second half is what they think is going to happen going forward. And their concerns about the economy going forward is what weighed on stock prices. So Walmart was a huge one last week, was down 9% since it came out with earnings last week. NVIDIA was down a little over 2% the day after its earnings came out. And then Lowe's was down 3.5%. So, and there were a bunch of others. It's pretty well agreed on, I guess, that the economy is slowing. Whether or not we actually go into a recession, and which companies, which sectors, kind of get the worst of it, will be interesting to see. But the economy is certainly slowing. The interesting one for me from, I guess, 2 weeks ago, I was watching Apple in the pre-market after it came out on earnings, and it was right at the beginning of that big rally that we saw at the end of October. But it was down over 3% in pre-market trading the day after it came out with earnings. And it was the same kind of idea as up here. The revenue for Apple was down 0.7% on a year-over-year basis. So, but obviously what happened, the market just shrugged it off. And, Apple continued up with the other Magnificent Seven. So we'll see if it can keep on going into the new year. And then we had FOMC, the minutes, so the actual report from the Fed meeting, from the last Fed meeting came out and talked about why they decided to hold rates steady. And then existing home sales was an interesting one because sales dropped 4% in October, but prices were up 3.4%. And it was the fourth consecutive monthly year-over-year increase. So rates came down a little bit. I think mortgage rates are like 7.5% right now, but prices are still going up for houses. Housing is, I can't imagine being 30 years old and trying to buy a house. It's unbelievable. Okay, so a lot of stuff going on this week. So Black Friday, right? This is kind of what everybody was talking about on CNBC. And so bad news for Black Friday. Retailers cast doubt on holiday shopping with cautious guidance. So this is kind of the bearish view of Black Friday. A slew of retailers have issued tepid, cautious, or downright disappointing fourth quarter outlooks over the past few weeks, casting a pall over the crucial holiday season right as they gear up for the biggest shopping day of the year. So companies, which include everything from luxury goods to BJ's wholesaler, so the gamut, cited a host of dynamics that led them to reduce their outlooks or issue forecasts that came in below expectations. So the big takeaway, if there's one theme that captures the commentary, it's caution. And while some retailers may have been overly conservative with their outlooks, The resounding lack of confidence spells trouble for the holiday quarter and raises questions about the overall health of the economy. Very tough to convert that into what the price of the C fund is going to do, but there's little disagreement that the economy is slowing down. At least that was that one CNBC article. And then I found a NPR article that was kind of the reverse, right? Roll your eyes, but Black Friday's still got it. So here's what to look for. Is Black Friday dead? Despite this annual speculation, the Friday that historically marks the start of the holiday shopping season remains, in fact, the busiest day for U.S. stores. This year might not be the best of deals nor the worst of deals, but the holiday season is expected to set yet another shopping record. National Retail Federation estimates 182 million people plan to shop during the long weekend, which is the most since the group began tracking in 2017. So that definitely goes to the consumer has plenty of money still, and the rally keeps moving. People in their late 20s to early 40s are expected to account for 40% of spending on Black Friday and Cyber Monday. Interesting, though, because a throwback to analog times, half of these shoppers actually said they plan to chase doorbusters, telling that Deloitte survey that they were considering shopping trips between midnight and 7 a.m. $900 budget on average people are going to spend, and they're just going to basically kick that bill into next year and hope for the best. National Retail Federation predicts overall spending will grow between 3 and 4% this holiday season. It's a slowdown from the pandemic boom, but in line with the prior decade. So the total is on track to top $957 billion, which would set a record. So clearly this article is saying that everything's great. It's going to be another record year for retail. So it will be very interesting to see how it turns out. So we shall see. All right. I had a really interesting question in the Facebook group. I apologize ahead of time for not knowing as much as I should right now about my TSP account, but if I were interested in investing in gold or silver, how would I find out how much of my TSP balance I'm allowed to use to do so? I know nothing about withdrawing or transferring. It's 100% in C. Okay. So the question is about, can I invest in gold and silver in TSP? Pretty interesting. And actually, but the answer is not what I expected it to be. So can you invest in gold and silver in TSP? There's no gold and silver or precious metal option in the core TSP, right? You get C, S, I, and F, and G. And what I expected to find was that you could invest in gold and silver mutual funds in the mutual fund window. But in fact, there aren't any. I was actually amazed. And if somebody can find some in there, that would be great. I couldn't find them. I did a bunch of searching for gold and silver mutual funds just in general, and none of the ones that I found, I looked at like the top 20 for 2023. None of them were in the mutual fund window. And virtually all the ones that I did find, when I dug into them, they're generally gold miner stocks, so in a fund, or some kind of gold derivative, because it's a fund, right? So there's no way to buy, and I think it probably goes to her question, there's no way to buy physical gold or silver in a mutual fund that's traded like a financial product, you know? Because I think that's what, and I mean, I don't know, I read the question, and I was looking at some of the comments on Facebook, and if the idea is that you want to buy gold and silver, you know, as a hedge against inflation and those kinds of things, you can't do it in TSP. And the comments went to, you know, you could take out loans, all that kind of thing.
I mean, that's where it would lead me to is like take out a loan, take that cash, buy actual gold and, you know, the actual asset. Yeah. Be careful if you do. There's just a lot of you know, scams out there right now because gold is such a popular thing right now as a hedge. Just make sure it's a reputable company, you know, yada, yada, yada. If it's a late night TV show, TV commercial, you might want to stay away from it. Internet ads, that sort of thing. You know, find yourself an asset manager that actually has access to, you know, that would be my only.
It's expensive because if you're going to buy it, unless you're going to take delivery of it, then
you have to store it.
The storage risk is on you.
Yeah, but that's really, I haven't dabbled in it that much, mostly for that, right? So because there's just so many nuances. Yeah. A, reputable, start there. And then B, once you start to learn all the associated fees with it, if you're not going to store it in your basement, right. If you are, you got to ship it. It starts to get really complicated.
It does, yeah.
And where would you store it anyway? And then there's going to be a minimum amount that you can buy.
Yeah,
and it's pretty hefty.
It is. I've looked at it a little bit, and I can't get over the premium you have to pay.
Yeah.
If a gold coin, it's not $2,000. Let's say it's $2,000 an ounce. It will cost you $3,000 at least to get that minted gold coin. The upcharge, for all the assorted fees and everything is
right.
Is a lot.
And the other thing to think about is liquidity, right? What are your options when you don't want it anymore? That's right. A big piece, right? A lot of people that do this, they're extremely wealthy. They don't worry about liquidity because they're probably going to keep it for like 20 years, right? They've got
you never sell it.
Their entire portfolio is balanced, and you might move around a little bit, but that part that's dedicated to precious metals, they're not going to be taking it in and out.
No, they just keep adding to it.
Yeah, that's more common is they're going to add to it, and that's really, unfortunately, this is another one of those kind of financial system tools, right? That is very inaccessible to the average person.
Yeah.
Even though it would be a good thing to do, they just don't. The system doesn't make it accessible, and not because they're. In this case, I don't think it's to keep the person down, right. Kind of thing. Right. It just costs a lot to do it. We're talking about real, metal here, and where do you store it, and what kind of security systems do they got to have? On and on and on, right?
That's the beauty of Bitcoin, right? That's one of the big arguments about Bitcoin.
Yeah, digital assets change all of that to where once it can hold value, and has stability,
right? Not so volatile.
That's right. the two pieces are the volatility and the stability. Yeah. Just being able to store value and not have it so volatile. And then digital currency, digital assets in general, doesn't have to be currency, really, really make this a lot more accessible.
Interesting, accessible.
Yeah, very accessible because, anybody that's got a network connection can be involved in it. Yep. And you can go fractional. That's the really unique part about, digital assets. One day I hope we can do a show and I'll sit on that side and do the digital asset part because that's my, that's the stuff that I love to keep track of and do and be involved in because it definitely is the future. We're nowhere near there yet, but we're definitely closer than we've ever been. But the digital assets really make it so much more accessible, and it's not as much to do with a lot of people think of it as like privacy. Won't know what I'm doing with my money. Right. It's not really about that. It's more that because it's digital, you can break it down into such low fractional denominations that it becomes accessible. That's why fractional ETFs are, have changed the industry. Yep. You can go into Robinhood on an app on your phone and buy shares of Apple.
Right, and you don't have to pay the $2,000 a share or whatever it is.
Right. That's just mind-blowing in itself. Right. And then once you do that with, a piece of art or
real estate,
a digital
anything.
Radio, collection, not radio collection, music collection, all that stuff. Anything that can be digital can then be an asset. And if you value that, and I value that, now we have a transaction.
We have a market. Yeah.
Yep. Yeah. Anyway, we digress a little.
No, it's interesting stuff. So I think part of the question goes to like security of your money, right? So, and somebody in the comments said, why wouldn't you just, put that in the G fund? So I just wanted to pull up a couple of charts to think through, is it really valuable, given that if you were going to take a loan against your TSP, to make that worth it, you're comparing it to the rate of return of the G fund. So it's high this year. It's going to be, say 5%. But even if the rate of return is like 2% on the G fund, you got to gold. If you did it in gold, gold would have to appreciate the 2%, and plus all the fees and taxes because you have to do it in a brokerage account and all these things, where you could just leave it in the G fund and get that rate of return with no downside risk. And so this is the chart of iShares gold. So it's not exact, but generally speaking, gold is like, it keeps bumping up against $2,000 an ounce, and this is 2,000 right here. So it's a pretty good chart for what actual physical gold is. It's not exact, but it's pretty close. It's GLD is the ticker symbol. And so gold had a huge run, right, from 2005, but it's been flat since 2005, right? We haven't, it's got a really nice cup and handle right now, and potentially it's in the process of breaking out. A lot of people are looking at that 2000 line to buy it, because once it's up here, it's smooth sailing higher. But if you looked at it historically, gold peaked here in 2011 and hasn't been able to get above it since. It certainly looks like it's building a base to break out and go above it. But if you were holding it over this time period, at least since 2011, you haven't made any gains. So silver is much worse off, right? If you were holding silver up here in 2011, I mean, you're at 48 in 2011, and you're down, you've lost half your money in silver. So it's also, though, setting up potentially for a move to the upside. But over time, silver has not really been a great place to make capital gains. The other interesting one, this is the S&P, so the C fund divided by gold. So that tells you basically when the line is moving up, the C fund is outperforming gold. When the line is moving down, gold is outperforming the C fund. So if you look at it, here's 2005, you got going into the bottom. Well, here's the bottom of 2009. So gold outperformed the C fund while, we're at the tech crash and the great financial crisis. So gold was a good place to be during that time. But since the bottom in 2009 was here, and certainly since 2011, the C fund has massively outperformed gold. So ratio charts are really good when you're trying to decide, do I want to be in this asset class versus that one? And then, over time, on a percentage basis, here's what it looks like. So this is gold. This is the C fund. This is that time when gold was really outperforming the C fund, right? But since then, gold has peaked, hasn't gotten above it, and the C fund caught up to it. So if you compared it evenly back there in 2005, you're at roughly the same place. So if you had put all your money in gold back then, or put it in the C fund, you would have made all your gains in gold early on, and then stayed flat. But the C fund, has pretty much been in this bull market ever since. So those are the kinds of things you would look at to try to make a decision between asset classes. And then this one is the S&P and silver. So you can see the C fund clearly outperformed silver pretty much. I mean, the great financial crisis, yep, precious metals. And that's why everybody now is talking about going into 2024, if we get a recession and the market crashes, you're going to see things like this in gold and silver. So in the short term, they're talking about energy, any kind of precious metals, gold mining, silver mining stocks, anything like that, because a lot of people are expecting something like this over the next few years. So it's just something to keep on your radar. Okay, C fund versus F fund. So here's a question I've been kind of struggling with for a little bit. Here's the C fund weekly. So a couple things. If you were trying to figure out when does the market top out up here, this is a weekly chart, right? So it's relatively long term. As price keeps moving higher, but relative strength keeps moving lower, that on a weekly chart, after you've come off of a big rally, that is a really good indication that you're going to get some kind of pullback. And then once it breaks below that 20-week moving average line, it's on. So what we're looking at right now is if price gets above 4,600, so 4,600 was this peak, and then 4,800 is the prior all-time high. So if price keeps moving higher, great. If RSI can't get above its prior high here, then you have a divergence between price, which is going higher, and RSI, which is going lower, and it's the same as what we would have had here. So that's what I'm looking at in terms of are we at a top? Right now I'd have to say no. This week is the first time MACD crossed to the upside on a weekly basis. And RSI is already over 50, and it's not overbought. So as long as RSI continues to move higher and price continues to move higher, everything's good. But if we start seeing divergences like this on a weekly basis, the top is very close. But either way, this is the prior all-time high for the C fund. So maybe we put in a new high. Okay, it just means that stocks are all that more overvalued. If you compare it to the F fund, this has been, so the peak in the F fund was back here in 2020. We have this 5-wave decline, seemingly put in a bottom when interest rates were at 5% a couple of weeks ago, and now we have a rally in the F fund. We also have a rally in stock funds, and stocks have a better rate of return when they rally versus bonds. But bonds are coming from a place of much lower value. There's much more basically potential energy down here in bonds than there is in stocks at the previous all-time high. And a lot of people will say, once we get above this high, just like we were talking about in gold, once we get up here, there's nothing holding stocks back. And that's basically true from the analytical perspective. It's also true that this is a historic decline in bonds. And it's just easier to chart out where you could see bond prices going versus stock prices. I think bonds are in an easier place to justify them moving higher than stocks at this point. And then certainly if stocks collapse, if we have some kind of financial meltdown, this almost guarantees is what happens in bonds. I say almost because there are definitely arguments out there that rates pulled back a little bit, which is what got this rally in bonds. But a lot of people think that rates are going to go much higher next year. And if that happens, obviously, the F fund will roll over, but stock funds will also. So 24 is going to be a really, really interesting year. All right. If you guys want the kind of more in-depth daily analysis of all the TSP funds, hit us up at growmytsp.com. Sorry. Questions?
So always forget that now that we got that other slide in there. Questions. If you have questions, please put them in the comment section wherever you find this video. If there's no comment section, feel free to hit us up at support@growmytsp.com. As you see, stuff that we see in the comment sections, not just on the video, but we see on our Facebook group and our Facebook page, it gives us ideas of things to talk about. So it's great. It's relevant to you because you asked us.
The questions.
Yeah. So, barring any comments and questions, we just come up with our own stuff.
Yeah.
And, a lot of great analysis, but it's great to get questions about it. I mean, we love talking about things like, gold and silver and how they apply. So, sometimes it can take us a little bit away from the TSP conversation, but it's what you guys are talking about. So we're happy to kind of give our 2 cents, if you will.
Sure. Yeah.
Hope you guys like the show. If you like it, please share it with your friends. If you don't like it, share it with them anyway.
They might like it. You never know.
Yeah, you never know. Give them a chance. All right, guys. Have a good week.
Have a good week.